Good day to one and all. This is Dr. Sivaraman of IKnowIndices.com. So I'll be presenting Asian Session Live Market Analysis on 22nd April today between 5 and 5:45 GMT. I will try to give the forecast for this particular week, 22nd to 26th of April, and all the 5 days, what could be the possible market moves. And also we will try to find out what has happened in the market and in what way the players are expected to take up the market. So first of all, I will try to focus on the derived forecast. So the forecast is derived basing on a statistical algorithm, and with which I am in a position to calculate the time of the market moves and what time and what days the market could make either up or a downward move within a week and also a month and several months. So on that, I am just trying to give you the expected market moves based on that study for a particular week. So let me display the slide pertaining to that. So this is the fourth week of the month. So first and the last week of the month you will come across the trend reversal move, but in between the month you will come across the trending move, and this time the trending move will be with the upward bias. So you might come across some volatility in the market, but ultimately the players are expected to take up all the currency pairs to the upside, especially the majors. So you come across the four majors and the two commodity pairs. They are being mainly operated or mainly moved by that of the players, with which they are able to bring in volatility to that of the crosses also. At a given time, they take two pairs and try to make moves in that, so that those two pairs will show volatility. Besides, the respective crosses will also show volatility. So of the six, at a given time, they will take any two pair and try to manipulate, and that way you come across the market is making suddenly some moves in euros, sometimes in GBP, sometimes in yen, and sometimes in Australian dollar, like that. And it might appear that because of the data release and because of the news pertaining to that particular country, the market is making moves, and that is how they pretend the market to make the moves. But ultimately they know in what currency the traders have got predominant positions. If the traders are predominantly long, they will try to drop the market and induce them to liquidate the long positions before making further rise. If the traders have got short selling positions, then they will try to continue to rise the market, induce them to do the short covering. So this way they are able to earn money consistently from the other market. But the traders find it extremely difficult to understand what is a market bias, whether it is a bullish upward move or a bearish downward move, and that is what they try to find out. And also you come across, even when a small swing of 10 to 15 pips happen, they become nervous because suddenly they make about 50 to 100 pips move and the traders get caught unaware. But if they use tight stop, the stops are filled. If they trade without a stop, then the market make a big move, and as a result their usable margin gets reduced drastically and create the margin fear. So the traders are in a fix, and what way they will be able to handle the positions and earn money from the market. So when the traders become distressed, then they are not able to think on their own, and they try to expect others to think on their behalf, and they ask all the experts, what could happen in the market, what could happen in the market. So each expert will try to use their own type of analysis and try to give the interpretations, and invariably you come across the interpretations or in the form of, in the event the market goes up, then a level is a resistance level. 1.3178 could be the resistance in the case of euro, and in case if it drops, 1.3020 is the support. That is how they try to give the levels. But if you consider the levels, then invariably we fail to recognize the type of moves in the market. For example, in the case of USD yen, you know that USD yen made a drastic drop. Okay, voice is back. Because the entire application got closed and restarted again for me. Okay. Okay, then probably I will just briefly explain what I explained earlier and then come to that of the expected market moves. So invariably the traders try to ask the experts because they are not in a position to think properly, and because of the market fear, and the experts always focus on that levels in the market. When they talk in terms of levels, then you find that market has to go to that of the resistance level to take a sell position, or market has to go down to that of the support level to make a buy. But when the market drops to that of the support level, then the experts say, wait, don't take a buy, because we have to see whether it is breaching that particular level or not, whether it is supported or not. And in the event if it breaches by about 10-15 pips, immediately the experts give that level, that next support level we have to look for, and the next support level we have to look for. By the time the market would have reversed and gone up, and then they look for the resistance level to sell. But when the traders say that, okay, can I take a sell around 1.3135, the resistance level? No, wait, it appears bullish, so wait for the next level to go up. So invariably the traders get the confusion, and the traders are uncertain with regard to where we can make an entry. And in the event if they make an entry and the stop is strongly suggested, and why the stop is strongly suggested? Because all our estimates are human-made estimates and it can go wrong. So ultimately when the stop is hit, the trader accepts the loss, but not the analyst. So how exactly a trader can get a solution for their trade? So first of all, we have to find out what could be the possible bias, whether it's an upward move or a downward move in a given time frame. Then later on, probably we can use other type of analysis and try to take a buy near that of the low or sell near that of the high, and then they'll be able to earn some money using the swing trade concepts. So on that basis, I am trying to give the expected market moves for that particular week. Hope you are able to understand why I am talking in terms of moves rather than the levels in the respective currencies. So all the descriptions here with regard to the type of moves are pertaining to the numerator currencies, Euro, GBP primarily, and to a certain extent Australian dollar. As I explained, among that of the currencies, the majors, Euro, GBP, are expected to gain substantially in this month as well as next month. And in the case of denominator currencies like USD-Yen and USD-CHF are also expected to gain the levels. And you would have seen the forecast I have given it in a fixed rate, the expert analyst forecast, and there you can see that I am expecting all the four majors to gain the levels. As a result, US dollar index may be unaffected, and that doesn't mean that the market has not moved up. So invariably the players are trying to make the contrarian move, rise Euro, rise USD, and rise GBP, and rise USD-CHF. Then with regard to Canadian dollar, USD CAD, they are expected to gain more levels. For now already it has gone above parity and it has not looked back at all, and it is expected to go up further. But any quick dip or a drop, you can take a buy in the case of USD CAD, and they are expected to continue to gain the level, but not the level of gain what you might see in the case of majors. In the case of Australian dollar, you would have noticed that they have gone from 1.01 to 1.04 area, 48 area. Then subsequently they had dropped it to 1.0270 area. Again they will try to gain it and go up to 1.0550 area and drop it to 1.03. That is how the wide range swings are expected to happen in the case of Australian dollar, and many are of the opinion that Australian dollar could soon go below parity, but it is not going to happen in this particular season. Keep it in mind. Now that is with regard to the specific currencies. Now coming to that of the expected market moves. Today is 22nd of April. They are expected to make a brief dip during start of the Japanese session, followed by a firm up move. So slowly they are expected to firm up towards close of this particular session, and followed by swing and quick rise during the European session. So when they make a downward swing, try to take a buy, and when they are closer to low, try to take a buy and use the hedging order to limit the risk. And my trading solution will be use hedging order instead of the stop, so that you can stop out at entry in the hedge if they drop further down, or you can book profit in the hedging and keep another hedging order to limit the risk. When they go up, you can book profit in the buy position also. So it is something like a person has got sell position feeling happy sometime during the market time, and a person who has got a buy position feeling happy when the going is good. But instead you have a buy as well as a sell, so when they drop, be happy with that. When they rise, be happy with that of the buy position. But for that you need to develop a objectivity with regard to the market, and also you need to find out when exactly you have to close the position. There comes your skill set. Develop the skill set. I explained to you, read the type of market moves, like the stop and extended move or the intentional move, and the time frame taken for each type of move. If you follow that, you will find it extremely easy to close the position and keep another hedging order that they may not fill. But still we have to use the hedging order, because anything can happen in the market, and sudden unexpected event can trigger the market either direction. So we need to be very cautious. We cannot afford to trade without a stop or a hedging order. But hedging order will give you further trading facility, but if you use the stop, then you have to re-enter into the market. There is a difference. So dip and firm up during that of the Japanese session, and swing and quick rise during that of the European session, and swing and firm up. Small firming up move could be seen during that of the US session. So European session gain might be substantial. You can take a buy and just close during end of European session, and allow the market to swing during US session, and the next day again they are expected to make a swing and slide tomorrow, and during the slide you can take a buy. And I will not recommend sell and buy trade, because if you try to take a sell and if you fail to book profit, they are expected to show the loss, because most of the time the people judge the entry properly but fail to exit at the appropriate time and the level, because they focus more on the levels rather than the time frame. So in that process, some people keep the limit order to close it, but the limit may be triggered or may not be triggered. In the event if it is triggered, then immediately they think that why not I keep further lower level as a limit, so that I will be able to maximize the profit. But that time they may not hit and reverse the market, and they may have to accept the loss. So ultimately your quick decision is very important, and in such a profit making position, keep the trailing stop, so that even if you fail to take a decision, the position is closed with a profit. Because in the computer age, you find things happen in milliseconds. So our thinking ability cannot be such sharp and quick. So you have to depend upon the trailing stop for that. Then tomorrow, the swing and slide during that of the Japanese session, and the swing and rise move during that of the European session, and swing and quick rise during US session. Then buy during late Japanese session and book profit during late US session. And Wednesday they are expected to make swing and rise move during Japanese session, and swing and quick rise move during that of the European session. Then book profit during European session. US session start, they will make a dip and then a rise. So during the dip, buy again and book profit. So I am giving you the timings for the swing trades. So if you are able to understand that, the session start time, everything I will be showing it in the next slide, so that you can follow the GMT time frame and make your trading so easy without any stress. Then 25th April, they are expected to make upward gap opening. So during the US session dip on Wednesday, early US session dip on Wednesday, if you take a buy and you use the hedging order, and once the position make profit, you can keep stop at entry. Then Thursday onwards, they are expected to make an upward move, and upward gap opening with a rise during Japanese session, followed by that of swing and rise during that of the European session, and quick rise moves during that of the US session. So at that time, Wednesday you can take during US session the buy position and do a position trade and try to close it either on Thursday or on Friday. Friday again they are expected to make their dip during start of the Japanese session, followed by that of dip and rise, then swing and rise during that of the European session, and a quick rise during early US session, and slow profit booking move towards close of US session are expected. So try to exit on the buy during early European US session rise and be happy with that. And later on they may just make a slide. And see, you might be wondering, I am giving all this information and the market is making predominantly this sort of moves, but still I am not able to make use of these information. If you got any doubt regarding this, kindly go through that of my trading system. I explained it in fxtrade.net. All the 10 webinars are recorded and displayed, and try to follow it. And still, if you got that doubt, you can contact me through email, or you can send it from FXTrade also, the email under my profile, and or ask in fxtrade.net. I am willing to answer to those questions if you have got, so that you will get the clarity with regard to how my trading system has to be used. So here primarily, because if you see in fxtrade.net chat, the newcomers invariably ask whether euro is up or down, GBP is up or down, USDN is up or down. That is what they ask. But there is no one to give an answer there. If you watch all the days, everybody says that it might go up or come down. It might go up or come down. So invariably the new traders are not in a position to get immediate solution. But that is not the way of approaching the market. Trying to ask somebody and simply follow them and try to do the trade, and if it goes wrong, then blame that person. You can blame the person, but the loss you have to accept. That person will not accept the loss. So we have to understand that. So whatever others say, there might be truth in it, or their system might be working well for them. They would have got certain other concepts. They would not have given such concepts openly, so they are able to successfully trade. But if you simply take the call and try to trade it, invariably you will find that it works for some time, and later on during the trend reversal time it does not work, and then you try to blame the person without understanding that you have to blame yourself. Anybody, whatever they say, if you simply follow it, then the problem comes. So we have to understand that we have to equip ourselves in understanding the market. Once you equip yourself, you develop the self-confidence in trading. Once you develop self-confidence in trading, then you find trading becomes a child's play for you. Okay. Then afterwards, next week, 29th April to 3rd May, and it is the ending of April and starting of the new month, May. So whenever such a week contains the ending of a month and starting of the new month, you will come across the trend reversal move in a very, very aggressive way. The market is expected to make a very aggressive trend reversal move, because this is the start, the first month of the second quarter. So invariably the market is expected to make some big volatile moves. The players are expected to quickly book profit of their buy position after the gains and drop the market and try to buy. And you know that how they have done it in the case of gold and silver, and everybody would have thought that, and no more shining of gold and silver. But now you find that they have started recovering. So this is the way, when they make a massive drop for 2 days and start of the 3rd day, immediately people become panic and they are afraid of taking a buy position, and they call it as a falling knife, without understanding the players don't do hat trick. And if you are very, very thorough with regard to the concepts, what I explained to you, you will never get the market fear, and you will be able to really understand that we can read the intentions of the players very easily. Now the next part of this is market reading. So we note down around 3:30 GMT the initial lows and the highs formed in 4 majors and 2 commodity pairs, and try to identify the type of moves in sequence what they are trying to do it. So I noted down around 3:30 GMT Euro formed the low 1.3054 and 1.3084 was the high. So it is only making a swing between the high and the low. Towards close it is expected to form up. GBP 52.05 is the low and 52.44 is the high, and again here they are making small swing. And the case of USD Yen, they breached the initial low 99.72, they breached and formed 99.62, and 99.89 is the high, that is intact. So net change is still positive and the euro also still positive. So they are trying to make a downward stop and before making above 100 in the case of USD Yen. So that is what they had done it now. So on Friday also, Friday you would have noticed that they have been making drops in the case of USD Yen to 97 area in order to hit all the stops and buy back. Whatever they sold around 99 area, they bought it back around 97, 98 area and again taken to 99 and then go above 100, and people will think 100 is a psychological level, better sell. They will take it up to 101, 101.50, then all will come for short covering and they will distribute their long positions to that of the traders and then drop it below that of 100. And come to 99.72, 99.55, etc. Then again take it above that of 100 and continue to rise. So this is how they try to play around with that of the traders. And they use various news as the trigger. And if you carefully watch it, such news are short-lived. They are only used as triggers and subsequently people don't talk about such news. Say for example non-farm payroll, if anybody talks about it, probably end of the month and the first week of the new month, people will be talking about non-farm payroll and afterwards they will say about FOMC, they will say about the consumer sentiment and forget about the earlier things. So they continue to create the sentiments with regard to the market triggers news, and you may find that first trigger the market came down, but at the third trigger it has gone up. So in what way that particular first trigger is compensated with the third trigger? If you question that, then you will be able to understand the market is being simply manipulated. Create the sentiment and act against traders, create sentiment, act against traders. That is what they do it day in and day out. So in the case of USD Yen, they have just breached the initial low and staying below that of the initial low 99.72 for 30 minutes. If they stay, then they may make one more downward stop for 2 hours and then continue to rise. So you have to find out whether it is a stop and or an extended move, because quickly they breached 99.72 and formed 99.62. It could be possibly an extended move rather than a mere stop and. So identify that. Stop and means it will happen in less than 2 hours and they will go above 99.72 in less than 2 hours and less than 30 minutes and stay above 99.72 for more than 30 minutes. Then the previous downward move was a stop and. But if they stay below 99.72 for more than 30 minutes after breaching the initial low, that means they wanted to make an extended move on the downside before making a rise. So once they form the new low and stop cutting the new low, for example 99.62 for 30 minutes to 2 hours, then you take a buy there and afterwards you will come across this rise. But our reading can go wrong at any given time because we are human. We have got limitations with regard to our understanding. So in such an event, we have to use the hedging order to limit the risk. In the case of USD Yen, any level you can buy and keep the hedging order 30 pips below, and if they drop, keep stop at entry in the hedge and let them go to any downward level and then book profit and keep another hedging order below that. Then they will start rising it upward and your buy will also make profit. As I explained, for continuously 2 months and more, they are making in this year extended one-way upward move in the case of USD Yen. Followed by that you will come across USD CHF to make such moves. Already they had done it in Canadian dollar above parity. Then CHF, suddenly you'll come across SNB trigger could be used as the market moving factor, and they could rise it above parity in the case of USD CHF. Then USD CHF, 93.16 is the initial low, 93.66 is the high. They are simply making consolidation. And Canadian dollar, 1.0248 is the low, 1.0261 is the high, unchanged. They are not breached low or the high. Australian dollar, 1.0267 and 1.020308 are the lows and the highs. They are not breached. So now it is a question of yen story, because there again, there only they just made the downward stop and move, and then they are holding below 99.72. Another dip, when they are making a small dip in the case of euro and also GBP, in order to and also swing variedly. Earlier GBP was showing like slightly negative net change, euro was showing positive net change. Now euro positive net change has come down, GBP positive net change is going up slightly, and this is how they are making the swings in order to handle euro GBP and euro yen and GBP yen crosses. So euro yen and GBP yen crosses, after forming the high, they are making a small dip, booking profit, and then can accumulate the buy position and quickly gain the levels in them suddenly during the European session. Watch for such moves and try to make use of it in your trades. So as far as the market reading is concerned, we come across only in the case of yen, they just breached the initial low and by 10 pips and holding below that. So wait for 2 hours and take a buy position, or wait for them not to cut the new low, then take a buy position and keep the hedging order to limit the risk, and keep stop at entry once the position makes profit. Continue to book profit on the upside when they make move. So this is the forecast for today. Dip and firm up during Japanese session. So the session timings are 0030 to 7 GMT, and 7 to 7:30 GMT is the gap time before the start of the next session. 7:30 to 13 GMT is the European session, and 13 to 13:30 GMT is the gap time before start of the US session, and 13:30 to 20:30 is the US session. Then 20:30 to 0030 next day is the gap time before the start of the next day. During gap time, they are expected to make the false move before the move what they intend to do it during the next session. So it is the 4th week of the month. Swing and quick rise moves may be seen to liquidate the long positions what they have built up during early part of the quarter or beginning time. So contrarian moves to continue to happen. So that is why you come across the contrarian move. Euro is showing the USD weakening move, whereas USD yen is showing USD gaining move. So that is referred as a contrarian move. But clearly the commodities are just showing the USD weakening move, and they are expected to continue to make the USD weakening move slowly after inducing the traders to commit wrongly during the day, because ultimately the traders have to commit the positions, and once the traders commit position or take positions, the players try to make opposite move. That is the game. So irrespective of whatever the data release or triggers and things like that, the economic conditions of various countries, they try to do that. Okay. Let me take up the questions which are asked here. In the answer, you are expecting Aussie to stay in the range of 1.02 to 1.05. Also, you expect Aussie yen to move higher. Yes, Australian dollar is expected to be in the range, and yen is going to become weaker. USD yen is expected to go up, and that means yen is weakening against US dollar. As a result, Aussie yen will also go up. Then Chow Guide. So you have to logically derive it. Then you will be able to understand from the forecast of the majors, you will be able to derive the forecast of the crosses also. Everything I cannot give it as a spoon feeding method. Then Chow. Are we expecting Euro and GBP trending upward in this week as well as next week? Yes, they are expected to make aggressive gaining moves in this week and the next week. And if you notice it, from the second and the third week, they have done more of a downward consolidation because the second quarter beginning. So they had done the wide range swings and consolidated and taken the buy positions. So what they do is, say, they buy around 1.30, take it up to 1.32 on book profit and drop it to 1.30 area. What happens? 200 pips they gain. Then when they buy from 1.30 up to 1.32, their average is 1.31. With the added 200 pips profit, their average will be 1.29. So when the market is around 1.3132, their average will be 1.29. So this way, when they continue to buy at a higher level, still their average will be below their market. Once it comes to almost equal to market, immediately they liquidate the positions and try to accumulate and try to drop the market and book profit. So this is how they earn either way, and they don't become bullish or bearish. Even though there might be a good news coming from Europe or a bad news coming from US, there is no guarantee that they have to rise Euro, because they can still drop Euro, and technically they can give an explanation that it is but conditions so the market has dropped, or technically it is even though the data is good for Euro, it is already discounted, already it is structured in the pricing. So they can give any sort of explanations. Don't be moved with such explanations. We have to identify the type of moves and follow them. Next week also, the uptrend is expected to continue. Next month, more aggressive gains are expected in the market. Then Nambia. Does false move happen during beginning of the session? No. Beginning of the session, they try to make the stop ones. And in some pairs, they make a stop and in some pairs, they may make a small swing. False moves are restricted to that of the gap time and the data release time. Then Chow. Euro GBP cross heading down. Yes, Euro GBP is expected to come down. Then Nambia. After any extension move, price reverse, how many pips does it normally retrace? There is no question of calculating the pips. That is what, when you calculate in terms of pips, you will be really disappointed, let me tell you. And you know that people have done the analysis, okay, for non-farm payroll, how much of pip variation has happened using that trigger in the case of Euro or in the case of GBP. And they invariably found out that it ranges from 80 pips to 150 pips. Getting a range of that nature, or sometimes you come across very subdued moves, getting the range of that nature does not help in trading. We can statistically analyze and say that, but it does not help in trading. And similarly, if you try to calculate how much of pip it might go up or how much of pip it will come down, and you may statistically estimate that based on variables or based on sampling techniques, but ultimately you won't be sure whether they are going to do that particular average drop of 50 pips. So suppose the range is from 40 pips to 90 pips. You won't be knowing in next 30 minutes whether they are going to drop 90 pips or only 40 pips or 50 pips. Then what is a good idea of estimating it? Because you wanted to keep a stop so that the stop doesn't hit. But if you keep a 90 pip stop, in the event if they hit your stop and reverse the market, what you will do for that? There is no guarantee in that. So don't go in for such type of theoretical estimates which may not help you in trading decisions and execution of the trading. But during that of the extended move, normally they make about 40 to 50 pips or sometimes 60 pips, rarely. But what you have to see is, stop cutting the low, 99.59. See, from 99.62, they formed it as 99. 59. So I explained it. They come up to that of the initial low 99.72, but not breached and gone above. So they made one more dip. But this time the first dip was 10 pips. The second dip is from 62 to 59, 3 pips. Hope you are able to understand that. So that means it is in the decreasing order. 10 pips dip, 3 pips dip. Then the third might be about 2 pips or 1 pip. And then afterwards they will start reversing that market. Okay, no more questions here asked. So let me try to wind up the webinar. So expected market moves for this particular week. Today, dip and firm up moves during the Japanese session, followed by swing and quick rise. European session will make a very quick rise. And then US session, swing and firm up moves. Small moves might be seen similar to Japanese session. Then tomorrow, swing and slide moves during Japanese session, and swing and rise during the European session, and swing and quick rise during US session. So swing means a small up and down move, near that of the low, near that of the high. And quick rise is breaching the initial high and going above. Quick drop, breaching the initial low and going below. Then 24th April, swing and rise during Japanese session, swing and quick rise during that of the European session, and a dip during start of the early US session, and quick rise during late US session are expected on Wednesday. Then Thursday, upward gap opening and continue to rise, and quick rise during US session, and a lot of people might book profit during that. And Friday they might make a dip and induce the long liquidation, and later on rise during early US session, inducing the short covering. Afterwards keep the market swing on its own, and quick US session rise followed by that profit booking moves will be seen. So next week we will come across the trend reversal in the market, because it's a month end and the new month beginning time. So market is expected to make very quick volatile moves. Keep that in mind. So as far as market is concerned, Euro and GBP, they are not breached the low or the high, but in the case of USD they breached the initial low 99.72 and formed 99.59. 62 was the initial second low, and now after the extended downward move they formed 99.62, then 59, then probably they may make stop with it or make 58 or 57 as the new low, then continue to gain the level up to 99.72. Once they stay above 99.72, you can take a buy. Fearlessly you'll be able to see profit when they are going above 100. So this is how we have to choose the safe trade plans, because when the equity is small we cannot afford to take risk. So identify what are the safe trades, then you will be able to get an assured profit from that of the market. And if you are aggressive trader and you are able to limit the risk using the hedging order, then when they stop cutting the new low for 30 minutes, you can try to take a buy, then they will try to rise it, and then quickly keep stop at entry and remove the hedging order. So the trading strategy depends depending upon the efficiency of a trader. Then USD CHF, they are not breached the low or the high. Canadian dollar and Australian dollar also, they are not breached the high or the low. So it is more of a yen story now. So I'll take this opportunity to thank FX Trade for the facilities given to present the webinar, and also you people who have come here to listen to my webinar. And I'll come during the next Asian Session Live Market Analysis webinar on Thursday, 25th April, to review the forecast and also give the forecast for the rest of the week. So thank you one and all. Wish you happy trading. Trade fearlessly, get rid of the market fear with perfect understanding of the market. Thank you.